So, Oliver, more inquiries into the banking system in the UK. What's happened today?
So today we've had news that two regulatory bodies, the Competition and Markets Authority and the Financial Conduct Authority, are both proposing launching a full-scale, in-depth investigation into the banking market. Now, there's two parts of the banking market that they're going to be considering. One is the market for small business lending, and the other is the market for personal current accounts. But the problems in the two of them that they say today are broadly similar. There's a lot of concentration in the hands of the big four banks. There's not enough competition. People don't switch enough or as much as one might expect in a well-functioning market, and it's difficult for people to compare between banks and which offers them the better deal. So they're going to have an investigation to see what can be done to get this market moving a bit more fluidly.
So what might that mean for me as a consumer, and what are they trying to get the banks to give me different information or present it differently? What might be the outcome?
Well, there's lots of possible remedies. The investigation has yet to start, but amongst the remedies that's been suggested, could be forcing the banks to divest a number of branches and create new challenger banks. Because of that, we've already had a little bit of that with Lloyds creating TSB and RBS creating Williams and Glyn's. There could be more of that kind of thing. There could be a stipulation that banks should charge fees for current accounts and make it clearer what the fee is for the account, and so easy to compare between accounts, because at the moment it's difficult to compare charges for overdrafts and that kind of thing. So there might be a lot of new measures to make it easy for you to switch. Now, whether that makes people any more enthusiastic about switching is very much open to debate. People generally aren't that bothered about switching. I think they just want to know that the current account works. I'm not quite sure that there'll be a sudden enthusiasm for switching if there's all these measures in place, but we should wait and see what they propose.
So after a period of consolidation to strengthen the banking sector, we're now talking potentially about another period of proliferation. What does that mean for investors?
Well, so for investors, it depends what bank you've invested in. HSBC is one of the big ones, but their UK retail current account business is not a big part of the overall picture, so you probably don't need to worry about it so much. The ones most affected are Lloyds Banking Group and TSB, which is an offshoot of Lloyds. They're both very concentrated in the UK market, as increasingly will RBS be. Now, it's not great news if there's going to be an inquiry into what these banks are doing, but they've faced these investigations in the past and they've managed to come through them. That's not to say that all is sweetness and light for these banks, but I think it's a long time before shareholders need to worry about what the impact of this will be.
Well, we will keep tuned for further information on that. Thank you very much, Oliver.